Are you a first-time home buyer, or do you know someone who potentially is a first-time home buyer? The following is a presentation prepared by the National Association of Realtors in February of this year regarding a tax rebate program for first-time home buyers, which has been approved by Congress for the year of 2009 and 2009 only. The information contained herein is generally considered to be accurate at the time of preparation and to the best of my knowledge is still accurate. You should understand, though, that I'm a real estate professional rather than a tax professional, and you might want to confirm anything said with your own tax professional. In 2008, Congress passed a $7,500 tax credit for first-time home buyers. It went into effect in April of that year and was scheduled to expire on July 1st of 2009. The biggest problem with this program was that it had to be repaid by the new homeowner over a 15-year period. In effect, it was a 15-year no-interest loan rather than a credit. People tended to look at this as a debt rather than a benefit, and very few took advantage of it. In 2008, the National Association of Realtors went to Congress with three goals in mind. The first was to eliminate the repayment requirement of the tax credit. The second was to get the tax credit extended to the end of the year 2009. The third goal was to make the tax credit available to all homeowners rather than just first-time home buyers. We were successful on two of these three goals. The NAR did manage to accomplish the following. The requirement to repay the credit is eliminated from the 2009 bill. The credit has been extended to on or before November 30th, 2009. That means that if you close on December 1st, you're too late. You'd probably better not schedule a closing during the last few days of November, as it may well be delayed, costing you $8,000. The amount of the credit has also been increased from $7,500 to the $8,000. But one thing that was not accomplished is the credit is still just for first-time home buyers. It does not include anybody but the first-time home buyers. One of the biggest changes to the new bill is that the tax credit is refundable. That means that if your 2009 tax liability is less than the $8,000, you'll be refunded the balance. That means the IRS will actually send you a check for the balance. One thing that does need to be clarified is that the credit is actually the lesser of $8,000 or 10% of the purchase price. If the price is $75,000, the credit will only be $7,500. If the purchase price is $60,000, then the credit will be $6,000 and so forth. That means only if the purchase price is $80,000 or more will you get the full $8,000. There are a lot of taxpayers whose total tax liability is actually less than the $8,000 figure. The examples shown are from the 2008 tax tables. As shown, the single filer would need to be making at least $46,600 after deductions to have an $8,000 liability. For a couple, that figure would be $58,600. Those whose tax liability is less than the $8,000 would get a refund, so they still get the full $8,000. A taxpayer on a W-2 who has an excess withheld and would normally be getting a $1,000 refund would now be getting a check for the $1,000 plus the $8,000 tax credit. In addition to this, any interest they paid in 2009 as well as much of their closing costs are also deductible, so by itemizing, their check would be even larger. The next question is who cannot take the tax credit. If your income exceeds the phase-out range, you can't take the credit. Now what this is if you're married and filing jointly, the credit starts to phase out with a modified gross income of $150,000, and it's totally gone by the time your modified gross income reaches $170,000. If you're single, the phase out starts at $75,000 and it's complete at $95,000. It's exactly half what it is for a couple. You're also not eligible if you buy a home from a close relative such as a spouse, a parent or a grandparent, a child or a grandchild. And you can't stop using your home as a primary residence or you can't sell it for 3 years. And also, you cannot be a non-resident alien. You have to either be a citizen or be a resident alien. Do you remember we said that only first-time home buyers could receive the credit? Even if you don't think that description fits you, you might still have some hope. The government defines a first-time home buyer as someone who did not own another main home during the 3 years prior to the date of purchase. Example given is that if you purchased a new home on January 15, 2009, you could not claim the credit if you had or had ownership interest in another home at any time from January 15, 2006 through January 15, 2009. If the last time you owned a home was before that date, you're still eligible. Also, if you're married and filing jointly, you both have to qualify under this criteria. The requirements as to what type of home you may buy are rather easily complied with. The home has to be your primary residence. This normally means that you will live there at least 50% of the time. It can be a condo, it can be a single-family home, a co-op, a townhouse, or really anything similar which would be considered a home. The home must be in the United States. Vacation home and rental property, those are not eligible as they're not primary residences. And if you're buying new construction, the purchase date is the date that you actually occupy the property and no sooner. So you do have to move in before December 1st. If a home is sold within 3 years of the purchase date, the full credit must be repaid. This is a lot better than the previous program where the credit was prorated and had to be repaid over a 15-year period. The purpose for this requirement is to stop flippers from trying to turn a quick profit from the credit. Flipping is the practice of buying an investment property and quickly reselling it. The current credit is available to residents of the District of Columbia. Also, several localities have special financing programs available which are funded by revenue bonds. Most of these are for targeted groups such as school teachers, police, firefighters, first-time home buyers, or some other similar group. People who participate in these programs can also use this credit. Anyone who purchased a home prior to January 1st, 2009, though, is still subject under the old program and must repay their credit. Most people will be applying for the credit on their 2009 tax return, but there are provisions in the bill to allow for application on amended 2008 returns. If this is something of interest to you, you might want to contact your tax advisor. The Association of Realtors tried to get the credit paid at closing, but were not successful in doing so. It was explained that any system that was devised to do this would be difficult to implement and could actually delay the closing by up to several weeks. The new credit is much better than the old one, as it's actually a credit and does not have to be repaid as long as you live in the home for 3 years. The National Association of Realtors estimates that hundreds of thousands of buyers will take advantage of the credit, and hopefully they're right. As was said earlier, this information was deemed to be accurate in February, but again, I'm a real estate professional and you should contact your CPA or tax professional before making any major financial decision. I sincerely hope that this presentation has been of some benefit to you, and if you have any questions or if you'd like some assistance in taking advantage of this program, and if you live in the Las Vegas area, please give me a call. If you aren't in Las Vegas, I would still love to hear from you. I'd be more than happy to answer as many of your questions as possible, and I can also check credentials and refer you to an agent in your own local area there who has the experience and who can assist you with this. So please give me a call. Thank you.